What's up, guys? In this video, I'm going to explain the previous day's range report, but the outside close variant. So this is in all three stocks, forex, and futures. It is in the price action report type. It's right here at the bottom, previous day's range, and you just got to click on the outside close variant. Right now, we're looking at SPY in the trailing 1 year. So the outside close variant is different from the standard because the standard measures if price closed green or red on the day, but the outside close measures if we closed above the high or below the high, and then below the low or above the low. So I'm going to show you an example right now. So this is a completely naked chart, and what I'm going to do is I'm going to mark out yesterday's high. So then this would be yesterday, this would theoretically be today. And mark out yesterday's low. So we also have a trading view indicator, just so you know. We have one that automatically plots this, but for the sake of this explainer, I'm gonna stick to my drawings just so we don't get confused with the ones that relate to the previous day. So just so you know, we do have that, and the way that you request that trading view indicator is you just click on this and then punch in your trading view indicator or trading view username, which would be right here. In my case, it's edgeful. So I'm just gonna hide that. So you can see yesterday's high right here, yesterday's low, and we're looking only at the regular trading hours. So what's in this black area, we're not considering this candle right here. And what you can see is that we clearly broke yesterday's high here. So we broke yesterday's high when price action touched this level. Now that puts us in this bucket. So previous day's high gets broken. Now what are the odds that we close above that high or close below that high? So what are the odds we close above here or in this area or lower? So you can see that in the last year, 63% of the time that we've broken, that SPY has broken previous day's high, it has closed above that high. So as soon as price breaks this area, you can expect it to close above this high. Same thing goes for the other way. So if we've broken previous day's low, I'm going to invert this chart here so you can see what I'm talking about with a different example. So let's, in this case, this would be previous day's low, this would be previous day's high. You can see price here breaks that previous day's low, and now you can expect continuation downwards and close below the low 57% of the time. So how do you use this in your trading? Is to say, if price breaks that previous day's high or low, you want to expect continuation or at least price to maintain in this area. So if you're an options seller, if you're an options buyer, if you're a futures trader, if you're a forex trader as well, you can use this to not expect, like you should not expect price to do this and come all the way back down, because for the most part, it's going to close above that high. So that's how you can use this report in your trading. Make sure to pay attention about yesterday's high and low. And also, let me just remove this, remove these drawings, and then I will show you the previous day's range indicator. So you can see here, these are actually pretty close, but this high right here is corresponding to this candle. This low right here is corresponding to this low. If you just want to move over here, you can see again, this high right here is relating to this. This high right here is relating to here. And then as we just kind of go through this, I'm just kind of going over how this indicator works. So on this day, you can see where your levels are from the previous day. So you can see clearly right here is the previous day's low of regular trading hours in this case, and then this would be the previous day's high. So now in this case, we obviously broke above that high and then did not close above that high. That would have fallen in this category, but again, a lot less likely. And yeah, that's how this indicator works. So in this case, you want to mark out or it'll automatically mark out the previous day's low and previous day's high. So if you have any questions about this report, you can reach out to us right here. There's also explainer text here, a little bit more here as well, and then the video will be right here. So thank you very much for watching, and please let us know if you have any questions.